Want to know the secret to making money in stocks? It's not about timing the market perfectly or finding the next Tesla. It's about staying invested long-term through the good times and even the bad times. You see these stories about people making a killing in stocks overnight and you think, that's it, I'm in. But the reality is, making money in stocks is usually a marathon, not a sprint. Very few people become millionaires overnight. It takes time, patience, and a solid strategy. If watching your money grow while you sip your morning coffee sounds like your dream, you're in the right place. Smash that subscribe button and hit the notification bell because I'm sharing all my best tips and tricks to help you build that dividend-powered portfolio. Alright, let's kick things off with step 1. Opening an investment account. This might sound daunting, but trust me, it's simpler than you think. This is your gateway to the stock market, the place where your money will work hard for you. Think of it as planting a seed that will grow into a money tree over time. Now, when it comes to choosing an account, you've got options, kind of like picking your favorite coffee blend. Each type of account has its own flavor and benefits. First up, we've got the 401k, which is usually offered through your employer. It's a popular choice for many because of its convenience and benefits. The cool thing about 401ks is that you get to contribute pre-tax dollars, which means you're saving on taxes right off the bat. It's like getting a discount on your investments. Plus, some employers even offer a match, which is basically free money. Imagine your boss giving you extra cash just for saving for your future. Next, we've got the Roth IRA, which is a personal retirement account. This one is great if you expect to be in a higher tax bracket when you retire. With a Roth IRA, you contribute after-tax money, but here's the kicker. Your money grows tax-free and you don't have to pay taxes on withdrawals in retirement. It's a fantastic way to build wealth over time. How sweet is that? It's like having a tax-free income stream in your golden years. Don't forget about TFSAs and RRSPs if you're in Canada. These accounts offer unique tax advantages tailored for Canadians. So make sure to do your research and see what works best for you. They can be powerful tools for your financial future. Then there are traditional brokerage accounts. These accounts give you the freedom to invest in a wide range of assets. These are like the Wild West of investing. You can invest in pretty much anything you want. Stocks, bonds, mutual funds, ETFs, you name it. But remember, with great power comes great responsibility. It's important to do your homework and understand what you're investing in. My advice? Start with what you know. Familiarize yourself with the basics and gradually expand your knowledge. If your employer offers a 401k with a match, that's a fantastic place to begin. It's a no-brainer to take advantage of free money. And hey, if you're feeling lost or need some guidance, don't hesitate to reach out to a financial advisor. They can help you navigate the complexities of investing. The key takeaway here is that you need an investment account to start investing in the stock market. So take that first step and open your account today. Okay, now that you have your investing account set up, let's talk about what to invest in. This is where many people get overwhelmed. But it doesn't have to be complicated. And honestly, for most people, I recommend starting with index funds. They're straightforward and effective. Think of index funds like the all-star team of the investing world. They bring together the best players. They're like these giant baskets of stocks that track a specific market index, like the S&P 500. This means you're not betting on a single company, so instead of trying to pick individual stocks like some kind of Wall Street wizard, you're essentially investing in the entire stock market with just one fund. It's a smart and efficient way to grow your money. Pretty cool, right? But here's the real beauty of index funds. Diversification. This is key to managing risk. See, when you invest in an index fund, you're spreading your money across hundreds or even thousands of different stocks. This broad exposure helps protect your investment. This means that if one stock tanks, it's not going to make or break your entire portfolio. Your risk is spread out. And let's be real, who has time to research hundreds of individual stocks? Not me, and probably not you either. We all have busy lives. Index funds take all the guesswork out of investing. They simplify the process and save you time. They're like the set-it-and-forget-it crock-pot of the investing world. Just set it up and let it do its thing. So if you're looking for a simple, low-cost, and effective way to invest your money, index funds are the way to go. They offer a hassle-free approach. With index funds, you can invest with confidence and peace of mind, knowing your money is working for you. The buy and hold strategy. Time is your best friend. Now let's talk about the strategy that separates the amateur investors from the pros, the buy and hold strategy. This approach is not just about making money, it's about building wealth over time. This is where patience really comes into play. It's about having the discipline to stay the course, even when the market gets volatile. The buy and hold strategy is exactly what it sounds like. You buy quality investments, and you hold on to them for the long haul, even when things get bumpy. This means resisting the urge to sell at the first sign of trouble. You see, the stock market is like a roller coaster. It has its ups and downs, sometimes even taking you on a wild ride. But those who stay seated and don't jump off are the ones who benefit in the end. But here's the thing. Over time, the market tends to go up. This long-term upward trend is what makes the buy and hold strategy so powerful. Historically, the stock market has an average annual return of around 10%. This means that despite short-term fluctuations, the overall trend is positive. That's the power of compounding in action. Your investments grow exponentially as the returns on your returns start to accumulate. Now I know it can be tempting to try to time the market to buy low and sell high. The allure of quick profits can be strong. But let me tell you, trying to time the market is like trying to catch lightning in a bottle. It's nearly impossible to predict the exact moments to buy and sell. It's incredibly difficult, even for the most experienced investors. Many have tried and failed, losing more than they gained. Plus, when you're constantly buying and selling, you're racking up trading fees which eat into your returns. These costs can significantly reduce your overall gains. With the buy and hold strategy, you're not trying to predict the market's every move. Instead, you're focusing on the long-term growth potential of your investments. You're simply riding out the waves, knowing that over time, the market tends to reward those who are patient. This strategy allows you to benefit from the market's natural growth. Dividend stocks. Get paid to own stocks. Alright, let's talk about one of my favorite ways to make money in the stock market: dividend-paying stocks. Now remember how I said I love making money while I sleep? Well, dividend stocks are like the ultimate passive income stream. Here's how it works. When you buy dividend-paying stocks, you're essentially buying a piece of a company that shares its profits with its shareholders. So, every quarter you get a nice little paycheck just for owning the stock. It's like getting paid to own a piece of your favorite companies. Now, not all stocks pay dividends. Some companies reinvest all their profits back into the business, which can be great for growth. But if you're looking for a steady stream of income, dividend stocks are where it's at. One of my favorite ways to invest in dividend stocks is through high dividend exchange traded funds, or ETFs. These are like index funds, but for dividend stocks. They offer instant diversification and can provide a juicy stream of passive income. Explore new industries, the future of investing. Alright, for all you adventurous investors out there, let's talk about exploring new industries. The world is constantly changing, and with change comes opportunity. Remember when everyone thought Amazon was just an online bookstore? Look at them now. Investing in emerging industries is like getting in on the ground floor of the next big thing. Think artificial intelligence, renewable energy, biotech, the metaverse. These are the industries that are shaping the future, and there's massive potential for growth. Now, I'm not saying you should go all in on the next hot stock tip you hear about. Investing in emerging industries can be risky, and it's important to do your due diligence. But by staying informed and keeping an open mind, you can position yourself to potentially reap some serious rewards. One way to mitigate risk is by investing in industry-specific ETFs. These ETFs give you exposure to a basket of companies within a particular industry, so you're not putting all your eggs in one basket. That's it for today's video, everyone. I hope you learned a ton about how to crush it in the stock market and start growing your wealth. Remember, investing doesn't have to be complicated. Just follow these 5 steps, stay consistent, and be patient. If you found this video helpful, hit that like button and subscribe to the channel for more awesome content. Now keep that momentum going. Click on one of these videos right here to learn even more about dividend investing and building that financial freedom you truly deserve.